Traders lose when emotions take over. Recency bias is the biggest culprit, thinking the last trade matters more than the big picture. Today, why it happens and how to beat it. Recency bias is when you give too much credit to recent wins or losses. It tricks you into thinking short-term results define your strategy. That's dangerous because markets move in streaks.
That's so true. As humans, we give too much importance to recent events. Short-term wins create false confidence. Losses create panic. Pros trust backtests and stats, not feelings.
Rob and I experienced early success in our first year of trading options. We made $5.2 million in 52 weeks, but lost $1.2 million in the next 6 weeks. This tested our resolve and faith in math. Instead of reacting emotionally, we focused on long-term data and maintained discipline. We knew it would be a short bump in the road because we trusted the math. Yep. We made a full recovery because of trusting the math.
Recency bias makes traders quit too soon. Good strategies die because emotions take over.
When there's a losing streak, you want to change everything. Backtests tell the truth. Thousands of trades, not just yesterday. Trust the math, not your emotions. Traders abandon strategies after a few losses. Robots don't. They follow logic and probabilities. Discipline wins over emotion every time.
So true. Diversify trades to reduce short-term bias. Backtest everything. Big sample sizes reveal the truth. Automate decisions whenever possible and use that robot.
Remember, data beats drama, always. Hedge smart, manage the delta, trust the probabilities. Fear has no seat at this table.
Thousands of trades daily create micro samples. Weekly backtests on millions of trades keeps us objective. AI reviews our positions based on risk, not on feelings.
So as we all know, I love Christian Louboutin shoes. Some would say I have a shoe addiction, and yes, I do. Maria's shoe trade was started on June 7th, 2023, after I watched market measure videos on tastylive.com. I wanted to make some extra money to pay for shoes, so I had started doing the Maria shoe trade based on the math presented in the Tasty trade shows. What happened next exemplifies how recency bias can jeopardize a promising strategy. So I almost quit after a bad streak. I'm glad I didn't because now I have a lot of shoes. But always looking for more. Long-term view turns losses into wins.
Recency bias got you a whole bunch more shoes because you didn't fall for it. The ultimate danger. The ultimate danger of recency bias is that it causes traders to quit just before recovery. A losing streak may appear to signal failure, but in reality, it is often just noise. Don't fall for recency bias.
Remember, logic wins, emotions lose. That's the game. Play it smart.
True. Remember the key takeaway in this presentation. Math makes money. Discipline beats drama. Trust the process. Trade with your head, not with your heart. You have a great trading day from Rob and Maria.